Hi everyone, Ed here, Senior Forex Educator for Trading Advantage, and this is your daily market recap. Today we saw the markets focus on several key topics. The first and foremost, everyone is concerned about what's happened in Boston. There was a lot of false reports. A suspect has been identified. Someone's been brought in for questioning, back and forth, and we finally do have some confirmation that there is someone that has been brought in. I'm sure we'll get more answers throughout the rest of the day. The other key concern, Washington, D.C. It's the second consecutive day this country has been under attack, targets towards some key officials. And this uncertainty is never good for the markets. Uncertainty oftentimes will lead to some selling of some of the higher yielding or riskier assets. So we saw some moves based off of some of these catalysts. But for the most part in the FX market, we saw two key stories. Number one, the euro sold off tremendously. This move, there are several negative reasons on why the euro went down, but the key one was the comments from the Bundesbank president, Jens Weidmann. He basically said, because inflation is relatively contained, it's below the 2% target. Right now it's at 1.7. It's expected to decline. Everyone, though, did not expect this next part. They were surprised when he mentioned that it is likely we will see a rate cut next month or in June. Now, a couple weeks ago, Mr. Draghi said a rate cut is unlikely because, well, it's going to yield little benefit. And Mr. Weidmann's comments later on did agree with that, but the fact that he said there is going to be a rate cut really just put a panic into the euro. We saw it sell off all the way to 130. It took out that price barrier, and then also everyone is adjusting their trading models. For the most part, euro weakness was something that has been heavily targeted, and yesterday we saw a tremendous squeeze higher, and today we just saw that pressure come right back to the euro. And while it's stabilized a little bit, the downward pressures are likely to become something that will be a bigger story in the next couple of trading days. We also had another key event, the beige book. We get a sense of what the Fed is reading, and typically we try to get a better sense of what future actions might come from, because this beige book will give us the insight. It'll pretty much tell us how they're feeling about April. We all know March was a slowdown, and we were relatively surprised. Today we had a strong beige book. We were expecting a poor one. We were expecting concerns. They came out with moderate growth. We were expecting modest to moderate. Several key regions. We have 5 regions that have modest growth, 5 moderate, and then 2 which are doing much better. And this is something that highlights optimism despite several headwinds regarding manufacturing. We also had them provide us with some positive comments regarding real estate. So the beige book was extremely positive. Now, when you read it, the language is gonna say it's slightly better, but for the most part, this is the Fed we're talking about, and this was very optimistic compared to how they're normally presenting themselves. So we saw diverging stories. We saw a better situation in the U.S., a rate cut potential in Europe. And this basically is going to provide us with some key momentum. Limited statistics are coming out from Europe, and ultimately if we do start to see some of these key technical levels give, momentum investors could help take this to the next leg. So we'll cover this heavily in the trading room. Volatility definitely picking up, and we hope you all have a great rest of the day, and see you guys tomorrow.